Let's do it. So today is Sunday, February 4th, 2024. News for this week. On Monday at 10 a.m., red folder, you have ISM Services PMI being released. That's really all you have on Monday. On Tuesday, you have FOMC member Mester speaking right at noon. On Wednesday, you have two FOMC members speaking. You have FOMC member Kugler speaking at 11. And then you have FOMC member Barkin speaking at 12:30. And then you have a 10-year bond auction at 1. So a lot of FOMC members being active this week, talking up at the Fed level. On Thursday at 8:30, you have unemployment claims. You have FOMC members Barkin speaking twice at 8:30 and at noon there. And then you have a 30-year bond auction and no news here. So very light news week, right? All red folders really are just unemployment claims, right? At Thursday at 8:30. And then obviously Monday, starting the week off, you have ISM Services PMI at 10. So very light. And if I'm not, I could be wrong. Is Powell speaking somewhere this week? Will you look on Econ today, Henry, really quick, just to see if he's speaking? Because I thought I had read somewhere that he was speaking.
Today.
He's speaking today. Oh, okay. Yeah. So I would say with regards to that too, whenever you see him speaking on the weekend, your new week opening gap tends to get a little bigger. So I would just keep that in the back of your mind. If he's speaking over the weekend, that's going to cause obviously volatility behind the scenes. So when that market opens, don't be surprised if you get a little bit of a big opening gap. All right. Other than that, any questions, comments, or concerns on news? Very light week on news. Nothing crazy. Nothing super volatile that should be jumping out at you. Really, for me, on my take, I'd be curious to see how Thursday plays. That's where you probably will have the most movement is on Thursday. But just because there's no red folder news doesn't necessarily mean that the market's not going to move. Last week we had FOMC. Last week we had NFP. So a lot of certain sides of liquidity got taken. There was a lot of manipulation that last week, a lot of back and forth, and I think that a lot of damage has been done. So usually, even on this lighter half of this week, you could potentially see some movement now of all the damage that was done last week, right? There was a bunch of parties that were taking out both sides of the market last week. So price could very easily have a low resistance run. Might not be big, but it could be at least low resistance, and you might not have as much trouble finding direction in the market this coming week. Other than that, that's it for me on news. Other than that, let's go ahead and get into the dollar. DXY. Right, so if you guys have been following along, and it's been very tricky. It has not been easy following dollar because of the way it's been with indices. So if you obviously know, indices have been going higher, and so has dollar, right? If you're not familiar with what a mixed market is, that's what we call a mixed market condition, right? Indices are supposed to trade in the opposite direction of the dollar. So if the dollar's going higher, you want to see indices go lower, right? I'll be a broken record on this almost all year because it's not always like that though, right? And when they start to move in tandem and they start to move together, it's what you call a mixed market, right? That's where it becomes high resistance liquidity, probabilities go lower, and it's harder to find direction, right? It's, if you think of the market as a knife, it's not necessarily, an easy cut through on candles. It takes time for it to get to where it needs to go, and it's very hard to read. So we have noticed, and this is where me and Henry last week on NFP day, when we were looking at stuff, we were kind of, even us as experienced traders, we were kind of, in this weird predicament because we saw dollar going higher, right? If you go to the monthly, right, we've been sitting here and we've been looking at the idea that we could revisit this monthly CIBI. I think that that's where we're heading. But we weren't sure what that meant for indices, right? Because if that's the case and we're in a trending market, you would want to see indices go lower, but we're not in a trending market. So indices went higher, and we saw indices go higher too. So we kind of had to assume what's more the rarity, right? We had to kind of assume that the market wasn't going to be in a trending market. And so honestly, as we're in a mixed market, whether it's the dollar or whether it's the indices, one of them are doing a false move right now, right? That's what you have to keep in the back of your mind, is they're not both going to go higher forever. And so one of them is currently in a fake move, and one of them is going to have to pivot and go lower while the other one continues to go higher. That's where you start to see high probability setups in a trending market. Right now, we're not in that. So we are delivering higher into here, and I think that that's where we want to go on a monthly, right? I think from looking at it from a monthly perspective, this is your draw right here. When you go into a weekly, same thing. We've been expecting this, right? We've been expecting this weekly SIBI to be delivered to, right? Which is also a monthly SIBI. You have relative equal highs that are clearly seen on the daily. You have the SIBI that's been beautifully used as inversion, right? We've talked about this. You've seen me say this, right? The weekly has played out beautiful. That's why you want to keep focus on the higher time frames. The daily is where it gets a little weird, right? This was very hard to read, especially for myself. There were a couple times where I had a couple reads off of this, right? The way that we had closed on Thursday made me believe that we could potentially come and fill this liquidity void, right? But notice how we still respected the consequent encroachment of this BISI, right? Even looking at all these rejection blocks and looking at this, right? Once we tapped that consequent encroachment one last time of this overall BISI, right? Expanding higher, right? And I think that this showed us right there that obviously we were talking about this buy side and we thought that that was the case, but really we're focused up here now, right? That really gave it away. Friday's candle gave it away, and that's why we wait, right? I had no clue what it was going to do throughout this entire consolidated period. I had no clue what it was going to do. I was waiting. We were waiting for closure above this 103,600 level, right? We were waiting for something to show us something. And even on Thursday, when it gave us this down close candle, I thought that that was us signaling that it could potentially go lower, right? Because I saw indices go higher. So it made sense to me. Okay, dollar's going to hold this equal high set, probably come back in here and then maybe go higher. But no, it had nothing to do with that, right? It actually on Friday opened, all it did was touch the consequent encroachment of this BISI and then shot right back up to where we originally thought it was going to go. That's why you don't have to stress on the idea of trying to be right all the time or following the market in a direct manner, right? Now I should be certain, but I'm not, because nothing's certain. But now, even just that little trip up right there on between Thursday and Friday, now I would like to see price deliver into the buy side, right? The higher time frame, weekly and monthly SIBI, you've got a daily SIBI up here, you've got clean even highs up here, you've got a double high set right here. So I think that that's where it wants to go, and I can start to use now this down closure as a potential order block. And also now, obviously, we've delivered cleanly through this BISI, and if I want to use this SIBI as inversion, notice how the bodies of this down closure now helps me, right? So as going forward, I'm going to take some of this stuff off really quick. Right? I'm going to take this off, right? We could start to see price, and we're going to want to see price potentially run higher into there, right? That's what I'm looking for, right? I don't want it to hang back around here too long, right? It's done its damage in here. So now, aside from, and what's different from last week is last week we had no sense of what it was going to do with regards to candle closure. It was a waiting game, right? Waiting game. Now it's not so much a waiting game anymore, right? We want to see, now that we're in such close proximity to this buy side, we don't want price to hang around here too long. We want price to, if it's going to come down in here, it's going to test this SIBI one or two more times, and it should be very sensitive to it, and then from there deliver higher, right? We've done all this. Now I think it's in its move, right? We had to wait. Now I think it's shown its hand. Now we want to see some form of velocity higher, right? We want to see it have some urgency to get up to this buy side. Any questions, comments, or concerns, right? I don't think that we revisit these areas right now. As what I thought we could, Friday disproved me on that. And I think it still is, our original idea is still intact, right? We're taking buy side. We're going to leave this. Now the question is what does that mean for indices? Because indices have been going higher. One of them's lying to us, right? Keep that in mind. One of them's lying to us. If they're both going higher, one of them's lying to us because not going to do the same thing in tandem forever. So one of them is going to have to turn, and when one of them turns, the other one's going to have to keep going. And when you clearly see that, right? When you clearly see that, that should be an opening eye moment of saying, okay, maybe the market's showing me we're now in a trending market, right? Because then you can start to really get an idea of catching daily candles, daily ranges, weekly ranges, because you can trust in the direction in which you're trading, right? You cannot trust in the direction in which we're trading right now because of the way everything's moving. And even though maybe the dollar is the one that is showing the fake move, and we aren't necessarily going to go higher, even though that's not what I think. And I do think that we're going to at least run into this buy side in here at 104,200. If we just completely collapse through here too, it's not something that I would have seen, but it can totally happen, right? There's reasoning as to why I could do it. And that would just mean the indices are still going to go higher. Do I know what indices are going to do over the next month? I have no clue what it's going to do over the next month. But right now, all I know is that we're in a mixed market, and I have no reason to believe that we're going outside of it, right? So if we're going, I have to now expect with a mixed market, odds are, until I'm proven wrong, as dollar continues to deliver into this buy side liquidity, I have to expect what? Indices to what? Still deliver higher. I have to expect that, right? Even though that's not what ideally we want with regards to a trending market, you have to go with what the market's giving you. You have to trade what you see, not what you think you see. Just because I think I see one reversing and it's not actually reversing doesn't mean anything. I have to trade what I see. So therefore, if dollar's been going higher, indices have been going higher, then I had to expect that both of them are going to continue doing it until I'm proven wrong. I'm allowing myself to be proven wrong in this game of trading. Right? I don't always have to be right. So I'm going to stick with what's been going on. And I'm going to say as dollar continues to push up into buy side liquidity, indices still continue to go higher with their bullish sentiment. And then one of them is going to one day displace lower and very clearly show me that they aren't doing the same thing anymore. And then I can hop on the idea that, okay, we might be trending now. Right? I know that we're not going to be trending. So if we're not necessarily trending, what would that mean? Well, maybe I'm not holding trades as long. Right? Maybe I don't understand as much of, right, if counter trending trading for the past couple months have been selling, right, see how that plays on lower time frames, right? For right now, you just have to follow what's been going on. That's all you have to do, right? If dollar's going to keep going higher, it's going to deliver into 102,400, 104,300, and odds are indices are going to follow it, right? And so you just keep on doing what it has been doing for months until you're proven wrong, right? And maybe you being proven wrong ends up being one or two losses in the market, because what you've been doing for months, and this is a great way to try to start seeing that what you've been doing for months that has been working, right? If you've just been constantly buying ES and Q and they've been playing out perfectly, and then the same things that start happening where when you go to buy ES or NQ and price starts displacing lower and you're losing those trades, that could also be a signal to you. Maybe let me go a little bit neutral. Maybe we're starting to see some form of shift in signature, right? Just because you lost one or two trades doesn't mean all the concepts are wrong. Maybe you're just shifting something seasonally and you just want to take a step back and look at it from a neutral perspective, right? That should be a good signal to you. Yes, you lost one or two trades, but it's a tax to potentially get you to look into what might be occurring for the next turnaround on the next couple months, right? Other than that, let me make sure there's no questions. I can toss it over. Alrighty. No, any questions on dollar? Thursday candle didn't close below the consequent encroachment of last week's Wednesday's wick. Was that an indication of bullishness on Friday? Yes, that's a good stance. So yeah, we did not close on the consequent encroachment of this wick right here. Right? We didn't close here. The one thing that I was saying, I think I had said it on a stream, was to note that even though we did close below this one, and that was what I was kind of maybe identifying as maybe a signal to that we could go lower, but that was wrong, right? It wasn't really looking for this. It was looking for this daily BISI consequent encroachment. But yes, this would have been a good indication that we were unwilling. And I think I mentioned it too. I noticed that we had closed below this one, but I also noted that we did not close below this one, right? And that could have been a very clear indication that we basically were not, wanting to go higher. But I think the main giveaway was the consequent encroachment on this. The main giveaway was just how we basically took out Wednesday's low, touched the consequent encroachment of this, and then just delivered higher. I think, yeah, between the consequent encroachment of the daily BISI right here and not closing below this consequent encroachment of this rejection block would have been probably the two best giveaways. Any other questions, comments, or concerns? All right, Henry. All you, brother.
All right. Just one moment here. Okay, jump into indices. Everyone hear me okay? Yes, okay. All right, good. All right, so as expected, we've been moving higher. Right? We talked about how last week we were expecting the price to draw down into the weekly BISI, both on ES and NASDAQ. We had a greater expectation of it doing so on NASDAQ, given how the previous candle closed. But ES managed to find its way down there as well. And then we saw a beautiful response off of it to continue working up toward the buy side. So really nice price action this last week as we reached down into the weekly BISI and then continue to reach for higher prices up here. I'll jump into ES first, and then we can go to NASDAQ. So the expectation for indices, while the dollar is continuing higher and is likely to move into that monthly SIBI, the expectation for indices is to continue higher as well. Just like Carson talked about, we'll see at some point when we finally do get the change in things and see the inverse correlation go back to how it should be, whether the dollar is to drop or whether the indices put in a high and start coming off with a bit of a retracement. We will have to give some more time to see that. But as for now, the expectation with indices is to continue toward higher prices. I'm going to go to the continuous chart real quick. We can still see here that ES, put this on the daily here. ES still has buy side remaining above old highs back from January of 2022. So NASDAQ's made a new all-time high. ES has yet to do that. So there's still buy side resting above here. And if you're looking for higher targets on ES for a long opportunity throughout the day, this is where you can look to target. It's 50.28 and a quarter. Okay. As you saw, the nice drop down into the weekly BISI here, and then the expansion away from that. My expectation would be that likely this is reached for in the following week and next week. But if it doesn't, you can see price return into this candle's high for an immediate rebalance, and you can see it return into this candle's wick right here, and look for potential opportunities off of those PDRAs. In terms of the short bias, nothing's changed, or not the short bias, excuse me. In terms of going against the long bias, nothing's changed. What we talked about on the midweek review, I believe it was that as long as you don't see closure below mean threshold of this last down close candle here, then the expectation is that ES will continue to reach up to the buy side up here. Dropping down to a daily, still using this as the fulcrum point to find projections up here. So if you're looking for targets beyond the buy side, assuming ES is to continue running, you can look for that 50.50 and 3/4, 51.20 and a half, and you can take your fib and put it between these as well and find the midpoint of these and use that as an area to take partials as well. There is now a volume imbalance here, which can be referenced again this next week. So just be aware of this area on your chart right here. Price can come back in to deliver the sell side here and then continue working up toward the buy side. Let's see. Franklin, I might have missed your comment previously. Is that referencing DXY or indices? Any questions here on ES before we go to NASDAQ? All good. Okay, looks like we're all good. Okay, so no questions on ES, it looks like. How would you, Harish says, how would you draw, do you mean how do you draw the volume imbalance? Close and open. Yeah, I would just draw it like this. Close the last candle, open this one here. Okay, so we can work off of there and continue up to the buy side. Yeah, all good. All right, let's go to NASDAQ. And same idea that we're seeing here. NASDAQ, we don't really need to look to the old price data anymore because you've already made new all-time highs on NASDAQ. So just referencing what exists within this fractal right here. You can see NASDAQ came down really nicely to that consequent encroachment of the weekly VISI. And now is just continuing up toward the previous weekly high. So this will be your next draw on NASDAQ, being the buy side above 17,793.5. So expecting price to work there this week. And then as we drop down into a daily, you can see we have the same projection here using that fulcrum point. So extending beyond the buy side up here, next you'd have 17,996.25 right there. And I believe that's the level that I'm still targeting on that swing trade as well for the last piece of the position. One here and then one up here, if you saw that in the streams we did this last week. Same thing here on NASDAQ. We do have the volume imbalance, so just be aware of that. If we are going to leave the highs present earlier in the week, can drop down into the volume imbalance, return back into a discount of this dealing range right here, and then continue working back up into the buy side. All right. And then same idea regarding the going against the long bias, still would be closure through mean threshold of this candle right here. Otherwise, still going to expect higher prices for now. Any questions here on NASDAQ?
In this daily chart, the area where you showed the volume imbalance, would that also be considered as a immediate rebalance, right?
Right in here?
Yeah, right there. So there was no
yeah,
FVG and yeah.
Correct. So you'd have an immediate rebalance between this candle's low and this candle's high.
Right. But the volume imbalance is still there?
Yeah, I'd view this, you can view this as the volume imbalance. It's not so clear in the eyes of an immediate rebalance, I suppose, because we just have a wick on this candle, so you don't, this candle here couldn't form a fair value gap anyway, because we would need the body to be extending and then for a gap to be left in there. But you do have the wick here, which can be treated as the inefficiency, and we have trader all the way back to this candle's high. But yes, still viewing this as a volume imbalance between this candle's close here and this open on the daily. So you just want to mark that out like this. You can put your fib on it, mark your consequent encroachment, and just be aware of those three levels as discount arrays.
Right.
So you can see price either go straight to buy side, or you can see it come down into this area within a discount of this range, and then go to buy side. Would you consider this bearish volume imbalance, bullish volume imbalance as BPR? I guess this here, you're talking about this and this. It's not really something I've used in my trading. I don't, I'm not certain on that to give you a great answer. The only thing I'd say is if you have inefficiency that exists here and here, I would just be aware of that area trading and watch for how price trades around the midpoint of it. Since it is the volume imbalance, it's lacking some of the trading that we'd see if you saw like a SIBI and then a BISI form together. So I'm not sure for certain if you'd consider that a BPR or not. But just do be aware of it on your charts. Any other questions here on NASDAQ? Okay, I guess we're all good. We ran through the early part of this call pretty quickly.
Not bad. Hopefully it's been a lot easier for ones that have been, active and in the calls in the community this week. You've kind of really seen everything that we've been talking about. We probably sound like a broken record at this point, but it's good for the, for you to see it, at day to day so it unfolds. You want to go into? I can go into the training exercise.
Yeah, you can pull it up in Discord.
I will go over mine first, and I don't have. I have mine. I just don't have it like perfectly laid out. So let me go and find it. I'm pretty sure I used it on. Pretty sure I traded the mini or the micro this week. This was the scale-in portion, right? So we wanted, the idea of this one was to have 3 scale-ins and 3 scale-outs. And let me log in really quick. Oh, I am. Oh, I was in MNQ. MNQ. Am I in a trade? I might have accidentally forgotten to close a trade. I don't know where that is though.
That looks like you're in a short.
Oh, this is why. I might have forgotten to take a sell limit out. Why is this not pulling up? MNQH, that's why.
MNQH 2024.
Well, as you can see, I was not expecting to be in a trade. I think I had a limit somewhere, but I will just go ahead and close it. We're not going to count that trade. I guess I can't close it, so just don't mind that. That was an accident. Let me show you. So this was my first trade of the week down in here. Right? So kind of got caught up a little in here. The idea was that we were going to continue to deliver higher. And we had just filled this. We had just filled all of this inefficiency down here, right? So if I pull this out, we had just filled all this. And you can see that I was scaling in here. So if I go into a 15-second, I'll go into a 30-second actually. I won't go that long. And to be fair, guys, I'll try to see if I can have a losing trade because I think I probably had a limit or something up here that I forgot to take out. That's why you always want to make sure that you do not necessarily, you want to always look to see if you have anything open before you walk away from the charts. So in here, right, we had just filled that entire inefficiency. We came in here. You can see I'm entering in based on how these candles are closing in here. Kind of had a bad entry there, right? Stop is at this low. Stopped at the low. And My idea was that we were going to clear all of these pre-market highs, 930 highs. You know, we had, if you can look up here, there's relative equal highs from up here, right? So I have the idea that we're going to at least push back above these highs, continue our order flow higher. So my first entry was right here, right? I bought in with 3 contracts. I came back in as we pushed through back in here, right? I noticed how we reacted in there. And then I also used this as a breaker right here, right? So I had 1 entry right here, 1 entry right here, 1 entry right here. And as we pulled up, you can see I got stopped out. I moved my stop loss. So my stop loss, I'll create it, make it red, just to kind of follow you guys through. So stop loss was right here. Once we started pushing up into here, I did move my stop loss up here. I'm just to the candle bodies of this, using this as an order block and the mean threshold. And then I basically followed it through here, and you can see I got stopped out right there, right? So that was the first trade, but that's okay because I basically got stopped out in and around the average in which I was getting in at, right? So very small loss. Not even a full 0.5%. I think if we look at this, my first trade, right? I only lost $123 there, so less than a tenth of a, or around a tenth of a percent. From there, or I guess it would be, yeah, something, not a tenth of a percent, but so it gets stopped out there. And then from there, as we push back higher, you can see, to me, I'm thinking that we just reclaimed this BSC in here, and we're going to work our way higher. Where I messed up as a trader is I did not take a partial in here, which I should have, with regards to the context of the move that I was playing in on such a lower time frame. I should have taken a partial right here, but I did not. So I'm using the idea of this SIBI as an inversion, right? I'm using the idea that this SIBI is inverted. My stop originally was at the creation of this fair value gap. So my stop immediately went here, right? And you can see it stayed there and it got stopped out right here. So the stop never was able to move here. But I basically went in here for 3 contracts. I bought another 3 as we delivered outside of it. And then I actually ended up pyramiding more off of this BSC, right? Pyramided one right there, bad entry. Pyramided another one in here, right? And ended up getting stopped out there. And that trade stopped me out for $363. So a little over a 0.25% right there. But between these two, I'm still only 0.5% down, really a little under 0.5%. I still have a 0.25% to come back with, right? So I didn't trade the rest of that day. I did not trade the entire rest of the day. I came back on another day. And I came in here. This was the very next day, right? So I didn't try to use my entire trading exercise all in one day. I came back, right? Using this as a breaker, right? So I'll go on a 1 minute. Don't need to go on the lower time frames right now. Got to find it. Here we go. Okay, so on a 1 minute, right? The idea was really just trying to take a partial here. That was a partial there. I'll tell you where I was aiming for, but for right now, right? With the idea that we had a breaker right here, right? Low, high. We take out the low. There's tiny displacement in here. As we're playing off this, I'm pyramiding one. As it comes in here, again, another one. And then another one in here, right? So those are my 3 entries, my 3 scale ins. I'm scaling in, right? Notice how my last scale in is less than my other one. I'm using this as a breaker, right? You could also use this as a breaker, but I also was using really the halfway point of this rejection block, right? I was using this as that. My stop loss was right here. My stop loss was right here, right? Left that there. We came down into here, right? I took a partial. Once I take a partial there, right, my stop then goes to break even. So my stop came from there down into here. And then as we're delivering lower, so if I'm using this as a Judas swing, right? I'm using these as another, so as we deliver back below here, I'm taking another partial. So that's my second scale out. From there, I move my stop loss even lower, right? Now I've got to trail it in profit. So I just trailed it down in these highs in here above this up closure. And from there, if you use the 2.5, right? So I'm taking partials in and around these extension levels on down closure, right? Not trying to get my entire trade back, right? I did not get my entire trade back all in one. I didn't get it all back at all, actually. But then basically from there, as we start to displace lower in here, right? I moved my stop loss right here, right? On this candle that creates the displacement lower. And then from there, I ended up getting stopped out at break even on this candle right there, right? Because I was wanting on a 4 hour or on a 1 hour, right? I was really wanting us to deliver, maybe it was on the 4 hour. Yeah, I was wanting this to be my full terminus. So I got close to my terminus, but it did not hit before getting stopped out. Right, so this is where I was really aiming for it to go. As you can see, we ended up hitting it, but just not within the time in which I was trading it. So I got stopped out, right? It was, I had my 3 scale ins, I had my 3 scale outs. After I scaled the first one out, I went to break even. After I scaled the second one out, I moved it into profit. And as we continued to go lower, I kind of moved it a little bit more in profit from here, right? I had on a 5-minute, there was a SIBI in here, so I could not move it any lower than that. And it ended up stopping me out in profit there. So I did not make it all back, but I made more than half of it back, and I'm still able to keep my account balance here. Please do not note the 133. I will try to lose 133 to at least be fair and even. And then it looks like probably I had a sell limit. This was probably where one of my take profits were on these buys up here, and I forgot to take out. And then from there, that's where you see this happen and this mistake in here. But those were my 2 trades, right? Too early on the week for buys, right? Got caught up there, but did not necessarily lose a lot. And then the sells, I was able to mitigate more than half of it back. Any questions there? How did you choose that particular range as your Judas swing? Good question. Right? So if I'm looking at this, right? As I'm looking at this fractal of price action in here, right, that I'm using this breaker, you can see in here we've got a high, a low, a higher high, and a lower low, right? That's what this is in here. So that's what this is right here, right? So what I'm doing is I'm taking this and I'm extending it lower and getting my extension levels, just like this is, right? I'm utilizing this area right here as this. Does that make sense? All right, you could also, even from a higher perspective, use this one, right? If you really wanted to. But I was using just more in the fractal that I was playing in, which was the smaller one. Does that make sense? Yep, now I see it. Okay, good. So that was really my trades for this week. Nothing too crazy, kind of just still floating around that break even on the account balance. Haven't really gone anywhere with it. Still just trying to get my bearings straight there.
One question, Carson, I have is when we are using these standard deviation projections, I've seen that there is between 1.5 to 2, there could be retracement. And if it goes beyond 2.5, I've seen in Twitter or in other posts and videos that it goes at least to 4. So if that was the case, shouldn't you have put another TP at 4?
Right here? Yes, I
Yeah.
should have. I should have. Yes. I got greedy and I was actually just wanting, and that's where me as a trader, it wasn't the model that necessarily didn't work. It was me as a trader that didn't work. I was aiming for the fulfill, right?
Mm.
And I decided to just eat that, right? I should have had it at a -4 and I would have had a great exit, right? I got a little too greedy. I aimed for a little bit more in the market. I wanted that fulfill on the 4-hour, right? And it didn't necessarily give it to me, right? So from there, you can see how we did hit it, but we hit it way later in the session.
Right.
So
Yeah.
really, yeah, you're correct here, right? The terminus should have been -4, right? With regards to the context in which I was playing the trade, yes. I got greedy. I wanted to fulfill on the 4-hour, and I paid a tax for it, right? I paid a tax for it.
Sure. Thanks. Yeah.
Anything else here before we go into all the other submissions? All good here? Okay. All right, so this is the first time we will be looking at it through the Discord. All right, so let me share my screen. All right, so obviously the exercise for this week was you wanted to have 3 separate scale in, 3 separate scale outs, break even, stop after the first scale out, at least 1 trailed stop profit after the second scale out, right? That was the main thing. So if we go into Mr. Ranjan's trade, the duration was 54 minutes. The size of the contract was 4 contracts on micros. Risk to reward was around 2.19. The time of the day was 12:50 to the 110 macro, the PM kill zone. Specific PD arrays that he used a mitigation block with SMT divergence with ES and Dow with a 5-minute bullish fair value gap. He targeted a low resistance liquidity run to buy side liquidity above for individual take profit. His stop placement was closure below a 5-minute mitigation block. Yes, he did take partials. Partials were taken at 2 take profits, TP1 and TP2, as shown in the chart that we'll look at. And he went break even after the first take profit hit, moved his stop loss to break even 23 minutes into the trade. Emotions before, I waited patiently for the setup to form. Only after seeing the balanced price range on the 15 minutes and the SMT divergence at the lows with ES and Dow, I engaged. There was also FOMC in a few hours, so I want to get out of the trade to avoid the volatility as soon as I could. Emotions during, seeing price respect the mitigation block. Highlighted, I pyramided more and averaged down on my entries. After doing that, I immediately set partial take profits for TP1, 2, and 3. There wasn't any drawdown while I entered the trade, and that gave me confidence to hold longer in the trade. Emotions after the trade, though my trade did not hit TP3, I was very happy with the trade idea and the setup. I'm glad I was able to hold the trade to multiple take profit areas and the purpose of this exercise. This is the first time I had held it for so long. I love that. So if you look into here, right, he's using this as a mitigation block, right? Price creates some displacement as price returns down into that, right? You've got down closure here in the form of an order block. You can use this as a mitigation block. You can see that he's in a little here, but as he's entering in here, as we go into here, right? He's entering first there, then he's adding more of his pyramids in here. He's using the candle that created the displacement as his first TP. He's using the swing high internally as the second TP, and then externally up here, or still internally, but he's using this higher high as his third take profit. And you can see he takes his first take profit a little too early, but that's okay. We don't necessarily need it to trade there, or he's still paying it, the trader. From there, he'll move his stop to break even. And then he goes in again, and it's okay to take partials prior to what you think your TP is, right? To ensure that, right? You can always do it a couple handles or a couple points below or above whatever it is, just to ensure that you're getting it. You don't have to wait for it to trade to the exact level, and that's totally fine. And then from there, as he's trailing a stop, right, you can see he ends up getting stopped out on this down close candle in here. And from there, I would close the trade. Overall, he was able, did his full trade hit? No. Was he right? In some instances, yes. Was he wrong? Not necessarily, but in essence, yes. Did he make money? Yes. Does it matter if he was right or wrong? No. Does it matter if he made money and managed correctly? Yes. So this was a very good trade. You can see he's understanding where the balanced price range is, right? He understands what the SMT is going, where the SMT is taking place. And then from there, he knows that he's going in ahead of FOMC. And so he's trying to make sure that he's out of that trade prior to that. So if that requires him to move his stop tighter and tighter, that's perfectly fine. So overall, I mean, I like this trade. I think that you followed all the rules correctly. I think you got, you know, what you wanted to out of the trade, and you did the responsible thing, getting out ahead of FOMC. Henry, you got anything you want to add on this?
I think it's a great trade. Managed it really well. The only thing I wanted to take note of was you said in your on the Discord here, your stop placement was closure below the mitigation block. Just make sure you have a hard stop in there somewhere as well. I'm not sure if by talking about closure you mean that you're just watching it with a mental stop. Make sure you at least have a hard stop in there somewhere. But otherwise, really good trade.
Yeah,
I like
this
the use
time
of the
I had
mitigation
a
and
hard stop
Good
because
stuff.
last
Good.
exercise you guys had mentioned that. Yep.
Good.
Thank you.
Good. I like that. All right. Well done, Ranjan.
All righty, Miss Sarah. Duration of the trade was 4 minutes. She had 5 minis. Risk to reward per trade, I think 4.8 based on the short position tool. I'm unfamiliar with calculating this. It's okay. You'll get better with it. She was trading inside the PM session, the tail end of the silver bullet hour. She was using a fair value gap during the silver bullet window. The draw on liquidity, I was aiming for equal lows from earlier this afternoon up to the highs following FOMC took buy side liquidity. Stop placement at the top of the candle, creating the fair value gap. The partials that she took, I plan to take one at the first equal low created, second candle after entry, and then at my target, letting one contract run past. But I've never really taken partials before outside of a DOM, so I realized in the paper trading and trading view, I didn't know how to take partials. Definitely new skills I need to learn. We can help you with that, no problem. Time of break even if used, I didn't mark it. That's okay. Over time, you'll get better with it. Emotions before, neutral. I knew this wasn't real and it wasn't meeting most of the criteria, but I wanted to submit something to get in the habit of doing exercises. That's okay. That's perfectly fine. So wanted to get my very first likely embarrassing submission out of the way. That's totally fine, right? It gives us something to work towards. I was surprised it actually worked out. I was also surprised and a little panicky when I was clicking buttons and I couldn't figure out how to take a partial. After trade, honestly, I was pretty irritated. I had tried all day to get little scalps to work out that I actually cared about in evaluation accounts, and they had all failed miserably. And then after I'd given up and taken a break, this paper trade I didn't really plan or care about just worked out. Plus, it was bigger leverage in a range, and I would have never ended up taking it for real. So I was just like adding insult to injury. I know I failed the exercise for being too late in the day, not scaling in and out with micros, but it's a win for me to just turn in something. See some things I didn't know that I did. See some things I didn't know that I didn't know and submit to the correction process. That's totally fine, right? You're still, getting used to this stuff, and that's totally fine. So you can see that, as prices kind of displaying lower, right? You're going short, right? I'm assuming that your stop loss is above here. So as price is coming down, you're selling, and then you're putting your stop loss here, and you can see you just caught that run going lower. That's fine. And I'll get with you outside of this to kind of help get better at taking partials and stuff like that. Obviously, you know that you used 5 minis, and that's probably a little too much that you want, and it doesn't necessarily meet the criteria of it. That's totally fine, right? You got to start somewhere. You got to know what you're doing wrong first to understand what you could potentially fix later on. So that's totally fine. I'm glad that you were able to get a winning trade out of it. I think that this next exercise coming up this week will very much so help you out. But at least, you were able to at least see something and at least have it go in your direction. So that worked out. Henry, you want to add anything here?
Yeah, there's a couple of things. Like you said, with the partials and that kind of thing, that's all stuff that we can help you work toward, and then just making sure you're on the proper risk management dedicated to the account. This is something to work on too, and you'll work toward this over time. It takes time because it's a mental thing. It seems odd at first, but the best opportunities will be, if you're looking to sell, to be selling when price is moving higher and buying when price is moving lower. Because you can get yourself into a position with a trade like this where you're selling on the down move, where you're potentially selling into a move that will just offer a retracement following it. And with a tight stop loss like that right above the candle's high, this is a situation that many times will lead to the next candle trading up to the previous candle's high and hitting the stop loss right there. So you just want to be careful with that. But this is something to work toward over time. Like you can see just a couple candles before, you see how the up close candle trades into a little SIBI up there. That can be a selling opportunity within that. So you're trading inside these inefficiencies or whichever other PD array you use, but looking to sell on the up close candles and buy on down close candles. But otherwise, I think it's a great trade. I think you managed it well. You had a nice setup to make a pretty good reward on the risk you were trading for. I also really like Kate's comment below, a couple pointers from there. Yeah, if you want to, in these submissions, try to include a little bit more of your chart just so you can see how it develops and we can discuss it a bit more there. And then, like Kate said, try to treat the account as a real account so you enforce all the good habits. This is something I talked about in this last week too. I said, I put it in my commentary somewhere. I said, how you practice is how you play. And that means the practice accounts and the training exercises are, well, you shouldn't have any judgment of yourself or like beat yourself down in any way for times when you make a mistake or times you don't do things like you'd expect to. You shouldn't judge yourself for that because that's normal and it's part of the learning process. But you do want to treat your paper and your demo accounts like a real account because you're building the habits and the practices that you're going to bring with you to a live environment. And that's why I said when I had that swing trade on ahead of non-farm payroll, it wasn't going to do any damage to me if I held the entire trade through non-farm payroll. But I said, that is not how I would treat this trade. And you practice how you play. I'm going to do the responsible thing in terms of risk management. And I closed the majority of the position before the non-farm payroll release so that it wouldn't matter what happens on the release. And it's the same idea when you do these exercises and when you trade in your demo and paper account, you want to make sure that you're treating it just like you'd treat your real account. So you're using proper risk management. You're taking partials and stops when you should. And building those good habits. But otherwise, I'm happy you made your first submission, and this is a great place to start.
You got to start somewhere.
Into later exercises. So well done, Sarah.
You got to start somewhere. Alrighty, Miss Kate, narrative. Price traded into a 4-hour fair value gap and discount and seems to be respecting it. I thought we could go up and take out the buy side liquidity generated on the move down. Her bias was bullish. The trade idea, I wanted to use the volume imbalance for price to trade back up into the after price took liquidity and dug into the 4-hour BISI and showed willingness to return higher. I was only able to get in 2 contracts. Emotions before, I wasn't really sure if my idea would work out, but I felt pressure to get something in before Wednesday. That was probably a red flag right there. We were just consolidating in this area, and I didn't like what price was doing at all. I felt icky being in this trade after I exited the trade for break even before my stop loss was hit because I just didn't feel good about what price was doing. Takeaways. In hindsight, I was way too early with the bullish idea. Probably was obviously seeking the weekly BISI consequent encouragement, so I would have been better off looking for shorts just to be on the sidelines. Also, I didn't use the higher time frame properly. Although there was a 4-hour BISI, I should have taken into account that there was a weekly PD array below. The price is more likely to be drawn towards, and then maybe that would have been the reversal. So in here, as you can see, right, she's looking at this volume imbalance right there. Oops. She's looking at the volume imbalance. There's a volume imbalance right here, right? It's a 10-minute trade. She's trading with 2 contracts, 1 to 2, 1 to 3, and then potentially a 1 to 4.25. In the New York AM session, she's using an order block and the draw in a volume imbalance. The draw on liquidity is the 4-hour fair value gap high. Her stop is below the swing low, and she had a manual break even. So as price is coming down in here, she buys once, it comes in again, she buys again. And then from there, I think she ended up moving her stop to break even or manually took it out as she sees price kind of collapsing in here. But you can see overall that would have actually helped her, right? This is actually where I was also scaling in. My trade was in and around this area too. The one that I lost, I was on a 15 and 30-second time frame buying in here, and I ended up getting stopped out in this as well. So I agree, it was just too early on the week, but with regards to the training exercise, that's totally okay, right? Trying to just fit that in, and that's just something that we have to learn and understand what's going on with it NFP week. But you did the main forefront of what you're supposed to do, which is keep risk at hand, understand how to what's the word, navigate through, tricky price action. And if that means manually closing at break even to protect your capital, then that's what it means, right? And that's totally fine, right? Keeping your account safe, keeping your equity curve above water as much as you can. And then from there, obviously you could see what she wanted to play out. And it looks like, over time, her bias later in the week ended up playing out, just needed to dig a little bit deeper, right? And that's exactly what she notes here, right? This is where her entry was. And then this is what she overall was looking for, right? She should have, and even though the training exercises didn't necessarily really allow for it, because over in here is when obviously price was not necessarily, you weren't necessarily allowed to trade, right? We wanted to try to get into some form of trade within the first half of the week, not the second half due to the NFP protocol. But you can see more so actually the cleaner price action, even though it wasn't, ideal price action, the move in which we were looking for it to anticipate higher ended up occurring later on in the week, and that's totally fine, right? Price was seeking the weekly BISI consequent encroachment, which is right here, right in here. And then you can see from there how price respects it and goes higher. All good there. I mean, you did the main thing, which was, keep risk at bay and understand that no matter what, your main job as a trader is to manage risk, and that's what you did. Anything here you want to add, Henry?
I think it's well done with the risk management. This is a reminder to everyone too, if you don't find an opportunity that suits your model, or you're just not in a position to trade during that week, that's part of these exercises too, is understanding the emotional and psychological side of things. And if you don't think you're in a position to trade, or you're not finding a trade that is suitable for your risk management and your model, it's totally fine to not take a trade that week as well, and to just put in your submission exactly those details, because recognizing that is building your self-awareness, and that's going to help you when you take things to a live account as well, whenever you choose to do that, if you decide to. Otherwise, I think there's a good note from Kate about using the higher time frame inefficiency as well, being that weekly rather than the 4 hour. So just remembering that price is always going to draw to the highest time frame inefficiency or area of liquidity. And this is something we'll touch more on as we talk about things this week on the live streams. But if you think about it just in terms of time too, if you're going to have the largest potential ranges and expansions off of higher time frame inefficiencies, like when price draws down into a weekly and then will run toward the previous weekly's high, you're going to have a much larger range to capitalize on within there. And you'll have new displacements that occur within that on the way from the weekly BISI up to the previous week's high, being like 1 hour and 4 hour expansions. And that's when you're going to have these really long, nice opportunities within that long bias. So rather than looking for scalp opportunities trading out of like a 1 minute or 5 minute inefficiency, when you wait for price to trade into these higher time frame points of interest, like the weekly year, you can find much larger price runs like what we saw on Thursday and then on Friday's action as well. Just something to think about when you're looking at how you might be able to find a trade out of these larger areas. What else did I want to know on this? I think that's pretty much it. Otherwise, I think you managed the trade really well. It's a good idea in trade management when you don't see it playing out ideally to mitigate part of that position or even close it manually like you did here. So I think you did the right thing to protect your capital. And then if you look a little further in price action, it looks like you were right to stop it out too. So well done on this, Kate.
Good stuff. Alrighty, Mr. Ismail. Thursday AM session. I intended to take this trade on my practice account as it's outside the exercise parameters. However, I had the wrong account selected on TradingView. 19 minutes, 2 contracts. Trade idea, I used the 2022 model to play the retracement, targeting low-hanging fruit objectives as I was trading against higher time frame order flow at the time. Emotions, I was going back and forth in my head if I should even be practicing on days like this. The logic and the risk reward to me made sense. Price kept rallying after I took my full position off. To be honest, I thought about going in after we displaced through the mean threshold of the breaker, but I thought to myself, this is not the day to push, and let's end it at that. So obviously he's got the 2022 mentorship model here. I think this is one of the examples that we actually kind of talked about, right? He's got the market structure shift in here with the liquidity taken in here, also sell side liquidity taken down here. There is a very small BISI created right here, right? And as he sees price deliver in here and respect it, he gets in on the next candle, holds it in here. He holds it into this breaker, right? Right as price delivers into this breaker, he holds it, takes one out, and then takes another one out at the mean threshold of it, understanding the entire range where he's at with regards to he's in and around taking that draw to the equilibrium of the range. I mean, good trade, especially through a hard week. I know that you were outside of I know that this was, on Thursday, but it's still, you were able to find a good profitable trade. I mean, Henry, you want to touch up on anything?
I like the idea here. This was which day was this on? This was on
Thursday, late AM.
Oh, on Thursday. Yeah, perfectly. Perfect. So you're taking that trade out of the after we've already traded into the weekly BISI. I think this is one that we were kind of talking about. It was an afternoon trade, it looks like, but on the morning live stream, we were talking about the seek and destroy conditions, or not the morning live stream, but the live trading one, where we worked up into the buy side, back down into the sell side, back up into the buy side. So it looks like you kind of keyed off of that, and we're able to find a good opportunity in here. And I like how you managed it. Good job taking partials, taking them a bit sooner within those conditions that aren't as high probability. So you made a good adjustment there. And yeah, I like it.
Pretty good. You've started this count on a good good run so far.
Good run here.
Yeah, up 4.5%. Good stuff. All righty, Mr. Aiden. Using quarterly theory and a breaker block. Using the micros, right? He traded on the last day of January. Used the 1 minute. Was in a 10-minute trade. 3 contracts. Risk to reward was 1 to 2, around 2.5. Time of day was 2:43 a.m. entered, so he's trading in and around that London session. His liquidity that he was targeting to be taken was the quarter 1 relative equal lows plus the Asian high. He has the draw on liquidity being the new day opening gap on the day prior. His stop placement was below the breaker block. He had 2 partials, and he went break even at 2:50 a.m. So it looks like he went break even about 7 minutes after he got in. He had a neutral bias narrative. Price swept to the London Q1 relative equal lows and in Q2, and posted a reversal early before leaning into Q3. Price moved swiftly away after sweeping a low resistance liquidity run and didn't give me a chance for me to enter. I was also in a meeting, so I could not pay attention to the charts to find my entry. Nevertheless, my initial draw on liquidity was the new day opening gap posted on Tuesday morning into Wednesday. Price came to retest the breaker and entered 3 contracts. Was not given the opportunity to pyramid. At this point in time, I was aware that price may very well reverse, and I knew I wasn't in the right headspace for trading, especially after coming out from a meeting, along with the fact that I was counter trend scalping. I set partials to be taken at 2 highs annotated in the picture, grateful enough to get 11.5 handles at the second partial and move my stop aggressively upwards, as I did not want to be in this trade for any longer. Eventually getting stopped out a few minutes later. Price did eventually reach back up to the new day opening gap after 1 more retracement into my breaker block. In hindsight, I still believe, given in the headspace in the situation, I handled the trade well and I got what I came for, 10 handles. Emotions before the entry, annoyed that I missed the initial setup. Emotions after the entry, none. At this point in time, I came to the consensus that I did not want to be a part of this trade and wanted out, as I wasn't in the right headspace. Emotions after closing, none. So looking in here, right, low resistance liquidity run in here, using this up closure, right, you've got a low, a high, we take out the low, displacing through the high. He's using this as a breaker block. As price comes in here, right, he's using the context of just delivering into the breaker block. Very good entry, delivering out, displacing higher. He takes a partial here, and he takes a partial here, right? So just these 2 highs right here that he's using as a partial. And then from that point on, moving his stop higher because he felt like he no longer wanted to be in the trade. You can see there, and then getting stopped out there, right? Main target was here, and that's okay, but he did not want to sit through it because of his emotional stand, and that caused him to not necessarily have to wait and see price redeliver back down into his area and then wait even longer. So I think the best thing to take away here was your self-awareness, right? That's the main thing that you should, take away. You were self-aware in the fact that you knew that your headspace wasn't entirely there. So that required you to obviously manage your trade differently, even though it didn't necessarily, you know that you didn't have any other areas for pyramiding, and that's okay. I think the main thing to take away here is just being self-aware and what you're feeling at the time and what you're trading, right? And if that requires you to, adjust and pivot, that's totally fine. Anything that you want to add to this, Henry?
No, I think it's good self-awareness, good management, and when you're not in the right headspace for it, the best thing you can do is just find your way out of that trade or not participate. I think you had a nice scalp opportunity in here, and it may seem like a little win on that, but those add up.
They do.
And you're not always going to have an opportunity to pyramid into a position either. Sometimes you'll hit that first entry and it just runs off.
Yep, and you can see.
So
obviously,
if anything, I think this is a good indication of you had a very nice entry.
Yeah, entry was great. You got displacement in here plus this breaker. Not bad at all. Obviously, you can see some commissions in there, but overall, 3 little winning trades, and yes, they do add up over time. They very well do. This was his.
Looks like you're doing well on start to your account too.
Right, and you can see obviously it wasn't a great area to be in the market anyway, so that's probably the best you could have gotten out of the trade, right? It's the best thing you could have gotten out of the trade, so I think you handled it well. Alrighty, and then Mr. Singhi says, I have the screenshot of my trade on my work desktop, so unfortunately I won't be able to showcase my trade. A quick summary of my trade is that I traded in Q twice and I lost both trades. The first trade was on Tuesday. I was going for a long position during the AM session. I think a lot of us were. That's okay, as I expected it to break away from the 1 minute breaker block. Price oscillated too long inside the breaker block, so I just dropped the trade with $70 down, and price continued to drop lower. That should feel good, right? This should be a good indicator that you had a good feeling in the market, right? You cut your losses short, and it helped you in the future, right? That helped you. Second trade was on Wednesday. I wanted to be a cowboy. I wanted to be a cowboy and was quickly stopped out. I tried trading after the red folder news. I knew I was not supposed to trade after the red folder news on Wednesday. However, I wanted to participate for the weekly exercise. I was too busy to trade on Monday and Tuesday, so I was granted a window on Wednesday. I tried using an OTE using the bullish range after the red folder news and was quickly stopped out. I was down $450 for that trade. Once I tagged the 2 losses, I stopped trading. That's good, right? That's a good trade with regards to just losing and knowing that you're down where you need to be and you're not going to press it anymore. I think a lot of us this week, obviously, was a very hard week to trade, especially when when the market's not giving you what we wanted to, right? That bias that we were all looking for. I think we all had the idea that price was going to go higher. And I think one of the biggest things throughout all of us, both myself and all the others, right, where we were trying to fit that bullish bias in the training exercise in that NFP protocol, which was either Monday, Tuesday, or Wednesday AM session. And when you try to do that, right, that's okay. It's okay, and it should just be a lesson learned that you have to, the exercise is there to not only help you find little parts of your trading, but also just to show you trading at a whole, right? Understanding going forward that NFP week in general, just like anything, is going to be hard to navigate. Sometimes when you have that higher time frame weekly bias and you're looking for price to go higher, there will be weeks on NFP where it delivers very early in the week, and then you have a whole lot of retracement lower. That was not the case this week. It seemed as if everything that we were looking for was after the fact. And then you might be saying, well, Carson, why didn't you allow us to, why weren't we allowed to trade later in the week? That's because of the tendencies that ended up occurring inside the smaller time frames, right? A lot of you guys are still learning, and it's, it's hard to go into the later half of an NFP week, and with the exception that you're going to have a lot of probability, because even though the price action wasn't really clear with regards to the higher time frames until the back half of the week, on the back half of the week, we had a lot of those seek and destroy templates, right? You had a lot of this in here, right? And even though our bias was right, and that's what we were expecting, the main thing was just to note that a lot of us had the higher time frame bias right, but the weekly exercise did not allow us to capitalize on that, right? And that's totally fine, right? That should just be a good lesson for all of us to understand. Like, we do not, even though a training exercise might say something, and Henry stated earlier, is another thing is if you don't see what you want to see and you don't see a clear trade, a lot of you guys feel as if you need to submit an exercise, and that's great. But at the same time too, submitting an exercise is also, you could also submit and say, guess what? I wanted price to deliver into the weekly volume imbalance. I wanted price, or not volume imbalance, the weekly BISI, and more so the consequent encroachment. And guess what? It didn't deliver there by Wednesday AM session. So if that's what I was looking for and it didn't deliver it in the time I was looking for, I didn't take a trade, right? That is also a submission, right? And that's another thing to take note is, hey, you could sit here and your submission could simply be, hey, this is what I was looking for. This was the time in which I was supposed to be trading. It did not show me what I wanted in that time frame. Therefore, I did not take a trade, right? That's another thing too. Sometimes inaction is action, right? But overall, that's totally fine. You know, I think that the biggest thing that you can take from here is that you were able to understand what the market was doing. So you dropped the trade early, only down 70, and then price continued to go against you. So you saved yourself there. Anything you want to add on this? I know that there's no screenshot, but at least just reading from the context.
I think it's good. I think it's good you cut the trade, learning when to see you're on the wrong side of things, or potentially on the wrong side of things, and you can start to mitigate or just cut a trade. A lot of times, even if you're having uncertainty, if you're on the wrong side of things, and it is just hanging in your area too long, that's why I talk about with it not being the ideal scenario. And you can mitigate part of your position, just close part of it out, or just take the close it out and take the loss on that trade. That's totally fine. And you'll find opportunities later on when you start to see new price runs where you can get back in and mitigate whatever loss you took, or find another opportunity later. So I think you were good to make that decision, and it's something you should look to continue doing in the future.
All righty. I will go over this week's exercise. I think you guys will find this one very interesting.
In the Discord as well.
All righty. So this week's exercise, 21, right? Exercise 21 is all about trade selection. This week's assignment is very, very simple, but it leaves no room for error. You are open to trade the entire week, Monday through Friday. All hours are open for trading. We encourage that you trade your specific model of study. There is just one rule to follow this week. You are only allowed one trade, right? All account balances should be rolled over from last week. And really the idea for this week is to, one, trade your model, right? Trading is open all week for you, but you only get one trade for the entire week. Only one. If you're in profit, risk 0.5%. Win, lose, or break even, stop trading after that. If you are in drawdown, risk 0.25%. If you win, lose, or go break even, stop trading, right? Same thing as we always do. Target a specific liquidity pool or inefficiency, at least 5 handles on ES, 10 pips in Forex, and 20 handles on NQ. Moving to break even is welcome. You can take partials. That's totally fine. And always use a stop loss, right? Make sure you journal all this stuff after. But that is it's very simple. But you only get one. You only get one this week. So be very picky.
And this is posted in the Discord now as well. If you go to training exercises, just go to exercise 21, you'll find it in there.
Here, I'll show you where you can find it. So if you go to training exercises, you go in here, here it is, right here, right? So this is the only thing that you got to follow this week. You only get one trade. That is it. There you go. Any questions on this? Comments, concerns? All good?
All good.
All righty. Well, I think that should do it for the most part. I'm going to try to have the recording from last night's backtesting session up sometime this afternoon. Other than that, I've got a couple other resources that I'm going to try to get out to you guys in the next day. I'm trying to create a very generic and general checklist for you guys to potentially start following throughout your trading. You know, you can use it as it is. You can customize it, all that stuff. Hopefully that'll start to help you guys understand what you might want to be looking for, and it'll allow you to help, sit there and decide whether or not a trade's worth taking or not based on what you fill out via the checklist. Other than that, there's really nothing else on my side of things. Henry, what else you got? Anything?
I think that pretty much covers it. If you're on the call today, I think we had some folks on before, and some may have closed off as we get to the end. But if you haven't already joined the Discord, or if you're just new to the Discord, please use that link that I sent in the chat, and you might have to scroll up a little bit to find it. But send us a support ticket once you're in there. Let us know that you're coming from the website if that's where you found the link, and let's strike up a conversation in there so we can get you in. I think that is pretty much it. Otherwise, we'll be back doing our pre-market morning chart and chats Monday through Friday this week, 8:45. So we'll start with that, and then we'll work into some live trading as well. So look forward to some more good streams this week. And yeah, that's all for me.
We'll see you in the Discord. I'm all good. Thank you guys.
Okay, and we'll see you in there.
Peace.
Take care.